Okay, hi everyone, and welcome to the monthly webinar for August 2025. It's hard to believe it's August already, and where has the year gone? Obviously going very fast there. So if you haven't joined us today, our session will be recorded. So if you do need to duck out and would like to share with any colleagues, it will be available and the link will be sent to you. The recording of today's session will be available on our YouTube channel. And if I switch over to my browser. So if you visit YouTube, search for BGL Corporate Solutions or BGL Corp. There, any of the previous recordings plus any of the other webinars that we do at BGL are available there and recorded. I'm sure you'll find a few there with Aaron's lovely face there as well. If you do have any questions at any stage, please enter them there into the Q&A panel found there, and there's several BGL team members who will happily answer any questions, or Aaron or myself will come and answer any questions there at the end. So if I haven't met you before, my name is Jeevan and I'll be providing the BGL update for today. I'm joined by co-founder and CEO of Smarter SMSF, Aaron Dunn. Welcome, Aaron.
Thank you, Jeevan. Good to be here again.
It's yeah, it's hard to believe it's August already, isn't it?
Not wrong. So, and I guess most of us sort of back into the swing of things with the new financial year as well. So haven't seen much on the technical front. Obviously, we've only just had a couple of weeks of sitting in Parliament, and yeah, nothing of substance at this point in time. I think this week will be obviously a busy week with the government having their roundtables as well, and ideas out of that. Whether we see any law out of that in this term of government, we'd need to wait and see. But obviously, the Div 296 still hangs over us as a very, very big cloud. So we just still need to wait and see where things might land with that too.
Absolutely. I think a lot of us nervously wait that.
Yeah, and over it, which we just know we might be able to please too.
Yes, I think no one wants to read another press article about the same thing. So, all right, so let's jump into the BGL updates. So there's several updates that we've done over July and August that I'll cover. And then our next update's coming out in a couple of weeks' time there on the 4th of September. So first one there is ATO interest panel. So there's probably two distinct changes here. First, which I'll show in just a second, is we've added more details there to the panel itself on the transaction screen and matching screen. The other is obviously changing the tax, I guess, deductibility for several of the ATO accounts there with the changes that came in from 1st of July this year. So that will obviously be financial year dependent, but you'll find that obviously the treatment in the tax return for those will vary now from 1st of July. So jumping now, let's go into Civil Fund 360. So I'll jump out of that. Let's go into the transaction screen. And probably I should have already got a transaction there. Let's grab this one here. So for this particular transaction, we'll go to the more details panel. So we normally select the year and the details, as you go through previously. So, you would have seen previously, you would have had things like obviously the supervisor levy there for the SMSFs under a provision. So you now see the three counts below there in terms of ATO interest received, ATO interest paid, and fines and penalties. So that information there would need to be manually entered in, and obviously will go to the respective accounts there in the chart of accounts. These will obviously go to our default accounts there in the chart. So if you are using a custom account and would like to see that moved, you will need to obviously manually move that across or start using the newer accounts that are available there. So I'll save that, and what you'll see there, as you can see, we've got that transaction now. You can see it's now posted there to the ATO interest received account for that particular transaction. Okay, so next one there is around property dashboard. So this came about as we had a lot of feedback and I guess wish list requests from practices out there that in particularly commercial properties that were self-managed in terms of the rental agreement. They wanted the ability to issue invoices out to obviously the tenants, or it might even be themselves in terms of a related party. that they would like to, obviously issue those invoices rather than using just dedicated software. And it obviously felt part of either their self-managed super fund, or in other cases, it might have been a related trust or company. So let's jump across and have a look at how this works. So I'll go across there to the property dashboard. So obviously, depending on which menu you're using, if you're using the newer menu on the dashboards menu, on the previous menu, it's on the investment option there. So with the particular property, going into it, so if I go in and edit that particular property or going through, there is an option there on the top right there, create invoice. So going on there through around the particular invoices, you can go through and obviously select who you'd like the invoice to be generated to, filling in the particulars. So I'll just throw in some dummy data here. Select obviously the bank account details, which I'll just leave for now. And as you see, I type, you'll see there are previews available there on the right-hand side. Going through this, I think this one's not registered for GST, but we'll go through and see the particulars there on the right hand side, which can be obviously sent out. With the invoices there, they can be saved as a draft, and obviously there is the ability then to approve those, so you can mark and go through and look at particular ones. As you come back here into the invoice dashboard, what you will see there is all the invoices for that particular entity, or you can see that globally. It will show the status of whether they're paid or not. And what also occurs is if you do have a data feed coming in for that particular bank account, once the amount comes in, it should be automatically matched off against that rent amount coming through there automatically. A few things we will be adding going forward, and that will be the ability these invoices to be automatically emailed out, sorry, with reminders. And the second is the ability there to have a reoccurring invoice automatically set up. So there will be some enhancements that we'll be releasing there in the future. So you can see there's nothing too fancy in terms of what we do with those invoices. It's just obviously created with all the particulars there on screen. Okay, so going there to the next one. So this was in our lodgement screen. So earlier this year, we released our new lodgement screen to replace the old, which we've now switched off. And part of this now is we're connecting to ATO APIs that are either newly available or we haven't utilized before. And we're obviously downloading, as you can see there on screen, a lot of ATO data. So jumping across here into Simple Fund 360, again, if you go on to under the ATO menu, under lodgement, you'll find obviously all the lodgement details that you would have seen previously in terms of what you're waiting there to lodge. But up in the top right-hand corner there, you'll see there's an ATO option, and this switches now to a different view. So again, if you missed that on the top right-hand corner, click there on the ATO option. This one here is not connected, so you won't see any data there, but you'll have the ability there this information will be automatically downloaded in the background, so it should be there. But you can go through and click on the ATO download button to actually download the latest data available going through. Then you'll see the filters and options there on screen will change depending on what you have available. So obviously the more lodging parties or tax agents that you have, I think obviously more details that will be available there. The more different form types which are available will also display there. Switching back to this view, because I just want to show, I didn't have the ability to preview that on that test account there, but showing here on screen, what you will see here is the ability to see for all the entities within Simple Fund 360 or Simple Invest 360, you will see here all the entities listed and all the actual forms and the ATO status of those forms. And that's regardless of whether those forms have either been lodged using BGL or whether they're available to lodge, or whether even that form type is supported by BGL. What you'll also see there is, most importantly, is the amount due refundable, and that information is obviously available there to export out across the board. So you can go through, you can filter, bring through relevant information and obviously C across there. You also do a comparison between what's in BGL versus what's in there in the ATO to see is obviously do the statuses actually match or not, and obviously that relevant information. We will at a later stage also be downloading information from the ICA and ITA accounts or the activity account, and be able to download both transactions and balances, and again be able to compare and automatically bring that information through directly into the work papers. So that's something there at a later stage will be available later this year. So I'll jump back, sorry, to the PowerPoint. The next one there is around wrap statements. So again, this is a multi-phase project we're doing. So this first one here is available, especially for those that, I suppose it's really designed for those that can't get a data feed for that particular wrap, and record it now as a single investment. So as you can see, this is just really designed to bring in the year-end figures there automatically. At a later stage, we'll be enhancing this to include things such as for those who'd like to bring through, just for example, the distributions, including the tax data off the statement, but don't want to import transactions as they're either already there or using a data feed, or for those who would like to import just the balances at year end so they can be compared about the data that's what's in BGL. But let's have a look at what's available at the moment, which is really just importing there as into a single investment account within Simple Fund 360 or Simple Invest 360. So let's go to this particular one here, this fund here. So it's found, so in order to do this, it's utilized there from the feed management screen. So there on the feed management screen, which can be accessed from the connect menu. So I'll go across there and it's make sure you've got just the entity itself selected. And on the advanced options menu down the very bottom, you'll see wrap statement extractor, which will open up the lovely display we see there. So the instructions, follow them on screen. As you can see there, you can either drag and drop the particular statement, or in this case, I'm going to grab this net wealth one. And what it'll do, very similar if you've utilized obviously our bank statement extraction, our annual tax statement extraction, or rental statement extraction. Very similar process in that it'll read the particular statement, as you can see on the left-hand side, and extract and show the results there on the right-hand side. A couple of other important things here is that it is selecting up top here, where would you like that particular investment to be posted to? So in this case, I've got a net wealth portfolio set up, and I'll select one of the bank accounts here. Okay, so looking our way through, so you can see going through here that that each of the amounts that have been extracted, where they've been extracted from, are displayed here. So if I click, for example, here on the total franked dividends and this page search, you can see, if you can see that, hopefully on the left-hand side, it's highlighting where it's actually extracted that from, and that might be in multiple locations there, as you can see, or where it's finding. On the right-hand side, it will indicate where it's going to post to. So you can see here for all of these, that all the various amounts that will come through. In this particular case, I'm in the wrong financial year, so it's not going to allow me to post it, but it will then allow you to post those once you have confirmed the balances and brought that through. The other part is the same. It'll do a continuation, which is optional, which is actually then confirming the actual balances as part of that statement there. So if you are, as I said, if you are normally going through the process of entering those wrap statements in manually, this process should hopefully save you a lot of time. And then obviously look out for our next iteration of this, which will obviously have some enhancements for those that are either using data feeds or are looking to bring in all the individual transactions as we go through. Cool. So next one we did in one of the previous releases there is actually released an enhancement there to our AI assistant. So going through, so if anyone who hasn't seen this in one of our previous webinars or new features, Earlier this year released an AI system, which when you select an entity, is found in the top toolbar up top there. So you can see there the second icon, which is the little robot icon at the moment. When you click on that, it will open the AI assistant. So the AI assistant, as you can see here, on the left-hand side, we've got various assistants that have got specific purposes. So we've got an ATO system where you can ask questions against the ATO website, and it'll give you all the effective links. We've got a sort of generic BGL assistant, which is really designed, I would say more for SMSFs, but does still work for companies and trusts. And that allow you, I guess, ask questions about that individual entity. So for example, tell me about the, as you can see some examples here, tell me the detail of the fund, or tell me about the contributions, etc. We've got a couple of global ones here. These global ones are investments. So this could be show me show me all the funds which have an investment in crypto or BHP or have property, etc. And it will extract that information out for you. We can ask that free form. There's another analytics one which could be across the board. So this could be again a hot topic. Provide me a list of all the members which have a balance over $3 million or within a particular range, and I guess around that one going through. And then financial analysis. So this is something which will give analysis over an individual fund. So if I give to this one here, which is previously done, this will actually show going through here, obviously the financial position working the way through. If I go to maybe one of my previous ones, which might load quicker. So this is for the Div 296, where I've entered in, obviously project for the next 5 years, which is an option. It'll show here the assumptions that it's using. So you can see here 5% growth. It's looking at the current contribution withdrawal pattern, for that actual fund itself. And then it's actually breaking down the calculation per member. So what will actually return here is the estimated TSB per member, as you can see there. And I think for the ones by memory, the ones below, it'll do something slightly different. But as you can see here, it's showing the actual calculation of what the actually estimated Div 296 is. And going through, so it's actually showing you I suppose, all the underlying workings based on the current proposed legislation, I should point out too. If that goes obviously into a modified version, we'll update that accordingly. Then we'll show that obviously the effect there for each of the members, including those that are under 3 mil still, showing that there's nothing obviously going through over the next 5 years, and just giving you a nice summary there. So there's those types of things there where obviously have a look through there. It's obviously based on the projected earnings, but those that have obviously a balance over 3 million and might be affected by the proposed legislation, that's a calculator there to just look at some, I guess, further details for discussion. Okay, so jumping through. The next one there is, or the last one I should say, feature I'm covering is open banking reminders. So for those of you who have enabled open banking for some of your clients, I'll go back one step. Anyone who doesn't know what open banking is, it's part of our BGL bank data service, as it allows us to connect to every single bank in Australia via the government system, which is either known as open banking or consumer data rights. As part of that, the authorization needs to be redone every 12 months. So we now automatically will send out reminder emails when it's approaching 30 days and 20 days. And they're under if I jump back into Simple Fund 360, if I go back to or go under the feed management screen, we've also added some options there. Sorry, the wrong one. Under here, where you can actually add in additional email recipients there for email reminders as well, where obviously there's multiple trustees or multiple email addresses. Cool. Before I hand over to Aaron, I think the last slide I've got here is coming soon. So in the next couple of updates, once it's ready, we're actually combining the members screen, pension dashboard, and contributions dashboard into the new dashboard that you can see there on the screen. This will make it a lot easier, obviously, as there's, more and more members or individuals with multiple accounts, etc., to see that either that quick snapshot, to also never, transition between, review things such as beneficiary nominations, etc., quickly on the fly as you're, working your way through that fund. So the next couple of updates, we should see that. Okay, so I'll pass over now to Aaron.
Excellent. Thank you, Jeevan. All right. So for everyone, what I wanted to really cover off on today, just get to the bottom of the screen there so we can see, is to spend a bit of time on the Commissioner's changing views around when a pension commences, well, when a pension ceases, most importantly, because I did touch on this about 18 months ago when we saw the updated ruling 2013-5. And this year that we've just completed, 30 June 2025, as you work through your financial statements within Simple Fund 360, you're going to have to understand the impact of this changed view. So I've just got a fairly simple example here for you to work through, where we go through this 2025 financial year and we work out that we have a pension minimum that has not been satisfied for that particular year. So the first thing we need to remember here is, well, do we have any relief available to us in respect to that shortfall? So we have that opportunity to self-assess under the Commissioner's powers of general administration, but there's limitations in that insofar that it's got to be less than 1/12, and we can never have used that concession previously. Now, if it's outside of that, we can go and apply to the Commissioner to demonstrate that that was outside of the control of the trustee, and in some circumstances, you may be lucky to get that reassessed. But ultimately, if we don't satisfy either of those two requirements, then what the rules used to say was we lost our tax exemption for that year, and because of the fact that the pension for tax purposes ceased at the start of the year. As I said, we get no ECPI for that year, and all payments that have been treated for that year are lump sums, okay? But ultimately, what happened was we had to, or we were simply allowing for that pension to carry on and reset, in essence, at the 1st of July in that following year. So you can see a couple of other things there. We had our T-bar reporting that needs to happen at 30 June 2025 off the back of the failed pension. But ultimately, from a SIS and trust law perspective, the argument was, well, there was no breach to the terms of what happened from a SIS or trust law perspective. And therefore, on a tax basis, we were simply resetting on 1 July the following year. So that's the view that had been applied historically, but that is no longer the case, because this is now the view of the ATO, and you need to be absolutely clear on this. And I can tell you categorically, in the last 2 or 3 months, all the training that we have done around Smarter SMSF with our auditors has been covering these sort of topics. So auditors are going to be spending a lot of time in this area themselves and putting the questions to people about, how we deal with this under the new ATO view. So what the ATO is ultimately saying now is that the pension here ceases for both SIS and tax purposes. And the reason why they say it ceases for SIS purposes is because the minimum pension was not met during that year and cannot be guaranteed for it to be met in subsequent years. And therefore, when we look at the qualification for ECPI, we don't only lose it for that particular year in question, we actually lose it until such a time that there has been a conscious decision and a prospective decision to commute the pension. So where previously that was automatically resetting on 1 July, that is no longer the case. And it means that if we don't do the financial statements until some point in the future, now I've used a more extreme example of going 9 or 8 or 9 months down the track. It might be that we're doing it by the end of August, but the reality is is that the ATO now enforces the fact that the ability to claim ECPI again in respect to that pension, you must have a conscious and valid commutation at that point in time. So it means not only do we lose the 12 months of the loss of ECPI there, we will lose subsequent amounts right through until there is a valid commutation. And again, the definition within the tax ruling 2013-5 is for it to be a valid commutation, it must be conscious and prospective. So the obvious one is well, don't we just go and backdate this to 1 July? Well, the reality is if you were backdating it to 1 July, you probably wouldn't have failed your minimum pension on the 30th of June in the first place. So just lining these things up is really important, which is why we've been saying for some time, you use the tools that you have within Simple Fund 360 to be managing the ongoing pension requirements before 30 June, making sure that your clients take these amounts out as well. So from that point of view, once there's a decision that we have started that pension again, so we have a conscious decision to commute, and then we have a new commencement, and then ultimately those pension rules would kick off from that point in time as well. So there are some important aspects to understand from this decision. And this is, again, a view that the ATO has updated on their site. If all their content is very much linked to this now and is consistent with some of the other reporting that they had on their site where there was some inconsistencies in this. But ultimately, when we fail the pension, it means that that interest, because it is a conscious decision that needs to commute, it will go back to the accumulation interest. So if you've been running multiple pensions here and trying to have separate superannuation interests running, the commutation of this is naturally going to roll that money back into the accumulation interest. So it's not going to remain as a separate superannuation interest. For transfer balance cap purposes, there's nothing that changes from the failed pension reporting requirement. We look at it at an end of period reporting value, and we note from the debit that needs to be reported that it is a failed pension. But the difference here is under the old rules, the failed pension and new pension calculation was in essence identical. So it had no impact on the individual's transfer balance cap. Whereas now, it's when we re-report the commencement of the pension, which may be some time down the track, there's going to be a change in value that is going to get captured. And if that has gone up in growth, then you may be limited into how much of that can move back into the retirement phase as well. And like we've seen in any point in time where we do have a failed pension, it is important to note that some of these pre-1 January 2015 pensions, you will lose some of the asset test exemption or deeming exemption through the Commonwealth Seniors Health Card on the basis that that pension is being reset. And then finally, I guess we don't have a lot of detail around the impact with the death benefit pensions and the legacy pensions, but simply you would be applying a similar approach insofar that once that pension's failed, then the member would ordinarily with a death benefit pension have the opportunity to commence a new death benefit pension in some instances, or they would be needing to take that out as a death benefit lump sum. So the failed legacy pension one, again, we might sort of tie that around the commutation rules at the moment. So there are a number of questions that are still being asked of the ATOs to give us more clarification into some of these. But be very clear, this is the now in play view of the Commissioner from 1 July 2024. So they're not going back retrospectively to those previous years where pensions may have failed, but be very aware that that is the revised view. And therefore, you do need to contemplate how the rollback function really is going to occur, because there is a process in essence where we need to identify what that failed pension is, report that accordingly. Then there needs to be that conscious decision around the commutation that has occurred. And then finally, you're going and looking for the repurchase of that pension to the extent that it would be allowable as well. So we've made some changes within the deed, naturally, to cover the revised view of how the Commissioner deals with this as a particular issue. And then in our pension rollback documents, we've also added in an ability for you to choose not only a member request for commutation, but we've also then built that into a failed the pension standard option, and we've got that across account-based pensions. We've also got it for TRISs and TRISs to retirement phase. And quite clearly, the TRISs is the really dangerous one, because we then have illegal early access issues where those amounts would be deemed to be fully accessible in the hands of the individual, and no tax offsets off the back of that as well. So it was just an opportunity to remind people of the impact of that view. I guess, Jeevan, if you want to make any comments, I guess from an administrative point of view, there's kind of a few hoops that you got to get through, because you will have got to the end of the year and maybe done some cred entries. You're again going to have to go back and unwind those pension payments back to lump sum payments. That'll naturally impact a whole range of things in that process. So is there anything you want to sort of add to that off the back of, I guess, the technical stuff that I've covered there?
It made me think we probably need to have a guide in our knowledge center, probably to address this, because there's probably separate articles about, but not one whole. But you're right, and you need to reverse entries. You need to commute the pension using our wizard at 1st of July, and then, as you mentioned, any of the actual pension payments need to be then placed in the accumulation
Right.
as some payments. So obviously, the more payments there are, the more tedious that would be.
Yeah, and there is a bit of discussion where the industry has gone back to the ATO to say, well, look, rather than us having to calculate the tax-free and taxable component on every lump sum that then comes out, can we apply the proportioning rule that was established on that as I guess, a bit of a cost-saving exercise to the trustee, and because there shouldn't really be any economic loss to the ATO in that regard, but we don't have a resolution on that at this point in time. So yeah, the more payments that happen during that year, the more cumbersome that approach may actually be. And I guess the other thing is, if you do have multiple pensions running, you may want to look at if you've got the ability to have discretion on how those pension payments are paid, you may look to allocate more to one, to qualify one, and maybe leave one as the fall guy in that situation. So again, just think about the logic of what might happen in that situation and how you'll work through that approach. But again, it is now the way in which the Commission is viewing it as the finalised TR 2013-5, as I said, from 1 July 2024. The other thing that's just worth noting is we have updated our SMSF Foundations course. So that has been updated through to July 2025, and it is available through the BGL Learning Channel along with our Essentials course. We're still making those updates at the moment, but you can see there you do have access to that. So we do get a large number of students that work through that. So if you've got staff that want to get their skills up to date around either sort of foundations level or even at an intermediate level, we're still sort of working through our advanced level course. Most importantly, as an accredited educator with the SMSF Association, anyone that completes the courses do get a complimentary period of membership as either an affiliate with the Foundations course or an associate membership with our Essentials course as well. There is a bit more detail. You can see the site, the link there on the bottom of the page via BGL to access those courses, and all the details again of the number of modules and hours and the CPD that is awarded off the back of that as well.